What is going on? Welcome back to Financial Journey. So today I want to talk to you about ChargePoint. It's been a while since I've covered ChargePoint, so I want to go over some of the data points, fundamentals, and if right now is a good time to buy or not. So I'm going to go over all of that. Make sure you guys hit that thumbs up and subscribe. I always greatly appreciate that. And with that said, let's get right to it. So based on Friday, there was a lot of volatility. So you can see the low being $8.07, the high being $8.40, but it did surprisingly close in the green, so 0.85% in the green. As far as volume, it kind of was in line with the average, so that's pretty good and impressive for a Friday. But I'm going to go over all the data points, some fundamentals of ChargePoint, just to piece everything together. So starting off with options activity, there was a grand total of $1.14 million in calls being purchased on Friday versus 2.21 million in puts. And if you kind of piece all that together and combine them, there was a grand total of 66% of all the options were bearish. So of course that kind of matches with the amount of puts. So clearly people do anticipate for it to continue to trend down. Similarly, big money has been taking a step back, very notable one in fact. So as you can see, these are all the transactions that have occurred on the secondary market over $100,000, on which the last transaction, as you can see right here, was on the 20th. There was the 19th, and unfortunately based on this you can tell what is buys and what is sells based on the bid, the ask, and the selling price. And all of these were sells. So big money is clearly taking a step back, as is surprisingly retail. So looking at the momentum indicator shows number of retail investors have been getting out over the last little bit. It looks like since the 17th, or just a little bit prior to that, around the 13th. But still, a lot of big money is kind of taking a step back, maybe because of a lot of volatility. I'm not really sure. Let me know you guys' thoughts on that. Stochastic though is a little bit more neutral at 30, but still a bearish sentiment behind the scenes. And when it comes down to it, a lot of people are now anticipating for Powell to potentially raise the rates. So this might be one reason why both retail and big money is taking a step back. But a lot of people at the same time are looking at multiple different things, one of which is just ratios and multiples. So for instance, looking at ChargePoint, the current PS ratio is 5.7, the future is 3.9, which can be perceived as fairly cheap, because looking even a year prior, it was double this for the most part at least. And one very much, I guess, comparable company is Blink. So looking right here, 5.2 versus 3.2. So if you want to compare the two, it does show that for the most part, ChargePoint is a little bit more expensive. And so meaning you're paying a premium for that per dollar equivalently for sales. So when it comes down to that though, a lot of people are kind of pushing it further, especially like I mentioned already with Powell potentially raising the rates, even though some data has been coming out. And even though it hasn't necessarily been the best, I think more specifically the retail sales that came out, I believe on Monday or Tuesday, it kind of showed a little bit of slowing. But still, I do feel that unfortunately Powell is going to be raising the rate. So a lot of people are going to be looking at the balance sheet. So this is the highlights based on the last earnings for ChargePoint. So $283.35 million in cash equivalents and short-term investments versus $315.91 million in debt. So if Powell does potentially raise the rates again, even though it kind of might be already factored into the price a little bit, but if he does, then a lot of companies such as ChargePoint that is very much heavily reliant on debt is going to suffer. And of course, going back to the technical, so right here, it did fail to really stay above the 50-day moving average, and it did recently transition from the higher to the lower percentile of the Bollinger Band. Both kind of negatives. And of course, looking at some of the fib levels, with it being at 833, it is currently between this S1 and the pivot. So $7.60 is that next big support, $8.70 is that next big resistance. But you notice how there is a fairly large spread. That means there is going to be a lot of volatility, at least in the short term. Especially considering as well shorts. Shorts are on the sidelines just playing this whole game that they do have, and they've been very much involved in ChargePoint for a while. So based on Friday, they did increase 585,000 shares. So far, almost around 21% of the free flow is being shorted, so that's pretty significant. 62.7 million shares overall are being shorted. Cost to borrow average is 11.77%. So based on everything, so this is where now I'll kind of talk on whether it's a good time to buy or not. So based on this, so unfortunately with them increasing on kind of a flat day-ish on Friday, that's bearish. Options activity is very bearish as well, especially what's been happening over the last several days. Once again, is kind of bearish, and just the technicals are unfortunately not necessarily looking the best. So in my opinion, I feel if you are a swing trader, then yes, right now is not a good time to buy. If you're one of those individuals that's trying to catch the bottom. And on a side note, for full transparency, I actually do own ChargePoint. When I do my videos, it sometimes is conflicting because I own a lot of these companies I do videos on, but at the same time, I want to be very much honest and transparent with you guys and saying, if I feel that ChargePoint is going to go down, or Lucid, or whatever other stock I cover, if I feel it's going to go down, I let you guys know, regardless of that. But one way that you can definitely hedge some of your bets though is through options, doing covered calls. So highly recommend you guys kind of researching that, because as well, I'm not a financial advisor. You guys always do your own due diligence. But based on that, so like I said, if you are a swing trader, potentially I feel around the 760 range might be a good buying opportunity, but you have to be very, very cautious, because if it does break that, then it is a very, very slippery slope to $6.92. So once again, that's kind of where I feel that might be good buying opportunities, at least in the short term. But long term though, definitely want to put that in perspective, that if you are investing long term, you shouldn't really care about a lot of this short term movement. When you are investing in a company, you really do need to invest for the long term. EV, the whole demand is just going to grow exponentially. So of course, when it comes down to ChargePoint, it is going to piggyback off of a lot of that demand coming from the whole EV market. And just to put it in perspective, looking right here, so going to Interactive Brokers, on which I do have a link to them in the description below as well, if you're looking for a lot of good analyst ratings, forecasts, and everything under the sun. But on a side note, the fair market value based on Morningstar is around $11. So even in that comparison, if you're thinking bigger picture other than just a short-term swing, technically there is a lot of good value there with ChargePoint. And similarly, when it comes down to analyst ratings, analysts haven't always really liked ChargePoint per se, but some of them do have some fairly good ratings. Even looking based on last month, Oppenheimer, who has a 56% success rating, so that's fairly good for an analyst in reality. They have a $27 price target, similar to Matt at DA Davidson, $15 price target. So once again, bigger picture, I do feel that ChargePoint is going to go up, but if you're one of those individuals that's trying to catch the bottom, right now might not necessarily be the time. But let me know you guys' thoughts. Do you disagree with me? What's your take on all that? Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. But one final thing I just wanted to share with you, there is an amazing promo with Moomoo, link in the description below and also the comments. It's free to sign up for an account, plus Moomoo does also offer free level 2 trading and $0 commission. All you have to do, throw $100 at the account, you get 5 free stocks. Each stock is valued up to $2,000, plus you get a $50 cash reward. So this is an amazing promo. Link in the description below and also the comments. So take advantage of this. It's only up until August the 31st. And once you sign up, let me know in the comments which 5 free stocks you do get. I'm very curious because it is completely random. Some people get some fairly good stocks out there. So let me know you guys' thoughts. Don't forget to hit that thumbs up, like I said, and let's all make a lot of money on ChargePoint.